Warren Buffett says a real estate storm is coming. Over $2.6 trillion of debt looming over the U.S. real estate market. And by the way, Warren Buffett is dumping stock as we speak. He's dumped most of his Bank of America stock. Should tell you that he knows something that you need to know. So what does Warren Buffett know about the marketplace, the stock market and the real estate market that you need to know?
Warren Buffett's recent moves, what investors can learn. Have you been keeping an eye on Warren Buffett's recent moves? If you have, you might be scratching your head a bit. One moment he's doubling down on businesses hitting a 3-year low. The next, he's selling off billions in Apple stock. Yes, Apple! It's one of his biggest success stories. So what's going on here? Today, we're diving deep into Buffett's latest buying and selling spree. What's he offloading? What's he snapping up? And most importantly, what can we, the everyday investors, learn from his strategy? Buckle up, because we're about to break it all down. When it comes to Warren Buffett, there's one golden rule. The man plays the long game. Always has, always will. While some investors chase the latest hot stock, Buffett sticks to what works: value investing. Think of value investing like shopping for high-quality items at a discount store instead of splurging at a luxury boutique. You're not looking for trendy, you're looking for timeless. Buffett's strategy boils down to this simple rule: price is what you pay, value is what you get. Take Coca-Cola, for example. Buffett bought shares back in 1988 and still holds them today. Why? Because he knows the value is there. He's not flipping stocks like pancakes, he's patient, waiting for his investments to pay off. Now let's talk about what's leaving his portfolio. First up, Apple. Yes, the tech giant. Over the past few months, Buffett has significantly reduced his Apple holdings. But why sell such a winner? Well, for starters, Apple's stock price has soared and some analysts think it's overvalued. Buffett is cashing in on those gains while they're ripe. Plus, by trimming Apple, he's diversifying his portfolio and reducing risk. Next on the chopping block is Bank of America. Financial stocks have always been Buffett's bread and butter, but with unstable interest rates and economic uncertainty, even Buffett is cutting back here. These sales aren't just about individual companies, they're about the market as a whole. Buffett's actions are often louder than words. Selling in sectors like tech and finance might be his way of signaling caution. Now let's flip the script. What's Buffett buying? And trust me, it's just as intriguing. He's got his eyes on opportunities that align perfectly with his value investing philosophy. First up, Occidental Petroleum. Buffett's added $45 million worth of shares, pushing his stake to a whopping 28% of the company. Why? Because energy, despite its ups and downs, is a long-term play. Next, SiriusXM. It might seem like an odd choice, but even with a 60% drop in stock price this year, Buffett sees value. The company generates strong cash flows and recurring revenue. Lastly, VeriSign, a less flashy but highly profitable investment. Managing domain name registrations and internet infrastructure, VeriSign is a cash flow machine. So what ties these investments together? Strong cash flows and undervalued sectors. Buffett's not chasing hype, he's buying bargains in overlooked areas. His strategy is clear: sell overvalued assets and buy undervalued opportunities. Buffett's moves reveal a lot about his market outlook. By trimming tech and finance, he's signaling caution. By buying energy and infrastructure, he's betting on long-term stability. So what's the takeaway? Follow the fundamentals, be patient, and always look for value.